99% of people who invest in altcoins lose all of their money. And I'm not talking small amounts of money. I'm talking millions of dollars are lost in altcoins every single year. But there is a 1% who consistently make money cycle after cycle. And most people think that the key is to finding some sort of hidden gem. But the key is not losing everything on projects that go to zero. I've seen thousands of altcoins come and go since 2018, and I've seen the brutal mistakes that cost people their life savings. But I've also seen life-changing gains. So in this video, I'm going to break down the number one reason that you will fail in altcoins and the one rule you need to follow to survive. Welcome to Crypto Coach Will, where we bridge the gap for everyday investors wanting to build real wealth in crypto. I'm Will Wright, the founder of Mining Store and Imperial Wealth, two of Australia's leading companies in the crypto space. For over a decade, I've helped everyday investors safely and securely set up in the cryptocurrency market so they can build long-term sustainable wealth. In this podcast, we break down the complexities of the cryptocurrency market, everything from investing, trading, DeFi, and even Bitcoin mining. Let's get into it. Although I did say finding the hidden gem is not the key to success, it is definitely an important part of the mix. And honestly, it's the first place that you got to start. But identifying that hidden gem can be a lot harder than you might think. It's not as easy as just finding something that's been trending on social media. 9 times out of 10, by the time you find these hidden gems, you're going to be the exit liquidity. Everyone else has already entered in well before you, and you're simply buying into the hype. So let's go into 5 metrics that you can follow so that you can pick hidden gems before it's too late. The first thing you need to do is understand, where does this project fit in the mix? What's the narrative behind the project? Does it have any utility? Who is going to be attracted to invest into this project? For example, if you're looking at something like Bitcoin, the narrative is very clear. It's a store of value over a longer period of time. It's a decentralized project, which is well sought after in today's modern era with such a corrupt system of governments. So understanding the narrative is relatively easy. But with some projects, you may be not understanding the narrative before you even invest. And this is the key thing that you need to identify before you get into the project. Without understanding this, you won't be able to assess whether this project has more legs to run or the narrative is over and there isn't really much behind the project at all. The second metric, and this is probably the most overlooked metric, but one of the most powerful and unique parts of investing in crypto, and that is, what is the tokenomics of the project? Understanding the tokenomics of a project is so important. One of the best things that you can understand is the vesting schedule. Basically, what the vesting schedule is this. When a project first releases, they do a distribution of the tokens. Some might go to the developers of the project. Some might go into early testers of the project. Some of the tokens may go out to early investors on an A, B, or C level investment. It is incredibly important to know what the vesting schedule is, because these are the first people that are getting tokens, and at what price did they get them. You can then see when their tokens unlock and get an idea of when selling volume might be coming in. The last thing that you want to do is invest into a project where people have got in at a much lower entry and their tokens are about to unlock just before you buy into it. As I say, this is quite a unique thing with cryptocurrency. Stocks and other investments have vesting schedules as well, but with crypto, it is usually incredibly transparent. So make sure you look into this when you're identifying an altcoin to invest into. Other things to look into with the tokenomics are things like burn rates and emission schedules. A burn rate is basically something where the project is burning off tokens that are in the circulation. And what this means is, if there's tokens being burnt off and deleted forever, then that means the supply is getting smaller and smaller and your tokens should go up in value. Simple supply and demand. Something like Hyperliquid has a brilliant burn rate embedded into the project's tokenomics. When all of the trading volume is happening on the Hyperliquid platform, they are using some of the fees there to buy Hyperliquid tokens and then burn them off. This reduces the supply and increases the value of those people who have invested in the Hype token. And the other thing to look for is the emission rate. You might see that with some projects, you can stake it, like Ethereum, and earn interest over time. But that's new tokens coming into the open supply. And if projects have a massive emission rate, printing 20 to 30% more tokens every single year, well, that can lead to a hyperinflation, and it can devalue the coins that you have invested into. So be aware of the tokenomics when looking into altcoins you want to invest into. The third metric, and this is one that a lot of investors get wrong, and it's understanding whether the token that you're buying actually has a tied value to the project overall. A good example that I can give of this was Stargate. This is one that I got wrong personally. Stargate was a new project released, I think it was around 2021, 2022. It was pretty much the end of the last bull cycle. And basically what this project was doing was solving a fundamental issue that was existing in the DeFi space for crypto. It was allowing you to bridge assets between different chains a lot easier on a simple level. Now, the Stargate token, however, was not really tied to the value of that project. The only real thing that the Stargate holders got was governance to vote on what happened with the project. And that can have value, but on its own, that simply wasn't enough. And all the Stargate token did was plummet to the ground. So this is a perfect example of a great project solving a real issue. However, the tokenomics was not there and the value to the project was not there. So investors in the Stargate token didn't really get the value of what the project was promising. The fourth metric is understanding the team behind the project. And sometimes the team itself can be enough for us to invest into something in the short term. Overall, an A grade team is what we look for long-term holds. But if a team is well renowned and there's going to be enough hype around a project, we will sometimes invest into a project simply because of that factor. But understand that's a high risk strategy and you're looking to get in and out, which we're going to cover very soon in this episode. But a great example that I can give of this is Asta. We all know Binance and we all know CZ, who was locked in jail for some time. And when he came out, he finally released his first new project, which was Asta. Now, Asta was the perfect project to launch because it was essentially a mimic of the most successful project of last year, which was Hyperliquid. This alone was enough for us to go in on a short-term play. We invested into Asta at around a 30-cent average on the day that it came out, and we actually sold out 4 days later at around $1.80 for a good portion of our investment. That is huge gains, but as I say, it was the team behind it being one of the most influential people in the cryptocurrency space, which gave us the green light, but it was for a short period of time. You need to understand this when you're investing into altcoins. The fifth and final metric that I want to look at is the project actually generating revenue? Now, it's not to say you can't invest into projects that don't generate revenue. However, understand that there's probably going to be a ticking time bomb situation. If you're investing into a project that doesn't have revenue generation yet, then how are they going to pay for developers? How are they going to pay for new upgrades to the network? Well, they're most likely going to have to sell off their own holdings in the project, and that's going to cause the price to slump over time. On the other hand, something like Hyperliquid, which has massive revenue generation through all of the trading volume that is being done on that platform, this is a project that goes into our personal high conviction long-term holdings because they're improving and they're actually generating revenue to continue to develop and have success in the crypto market. Now, this is the level of analysis that you need to do if you want to be picking those hidden gems. If you're simply just going off hype based on Twitter or a video you saw on YouTube, then I can almost guarantee you're going to be sucked into the exit liquidity. So if this all sounds too much for you, but you still want to get exposure to the altcoins and you want to get the timing right, like what we did with Asta and Hyperliquid last year, then what you need to do is take the ego out of it and let the experts do the hard work for you. I've been in the crypto game for 10 years now, and even today, I don't really do this level of research. I rely on my team of analysts to do it for me, and it allows me to focus on things like creating content for you and running my business. So if tackling altcoins is something that you still want to do, don't think that you can do it all on your own. Make sure that you're reaching out to experts, and Imperial Wealth is here to help you. There's a link in the description if you want to book a call with one of our experts. They're more than happy to run through this in detail with you. All right, so there's a really good understanding of what it actually takes to find the hidden gems. But really, that's the start of the journey here. Once you're invested into the project, the next most important thing becomes your psychology. The number one way to have strong psychology is to have a plan before you even enter the market. And I guarantee you, if you don't have an exit plan before you even enter, then you will be the exit liquidity. That is, as I promised at the beginning of this episode, the number one rule that you need to follow when investing into altcoins. You must have an exit plan before you enter. Now, another rule that you need to follow when investing into altcoins is this: do not be married to your bags. Now, what this phrase means is you are absolutely going to come across projects which relate to what you see as valuable personally. It might be a problem that you're facing in your daily life, and the write-up of this project completely solves it for you. And it's absolutely mind-blowing, and you become attached to the project. But let me be the warning of advice here. You cannot be married to your bags, or you will be the exit liquidity. So what you need to do is, as you enter in the project, understand that your main purpose here is to make money. You owe no allegiance to this project. If it has a strong community and you enjoy having conversations with people, then separate that from the investment that you're making. If you want to be successful in altcoin investing, you cannot be attached to the project. It's so important to understand that the majority of cryptocurrency projects are experiments. They're really not revenue generating yet. They may have a great idea, and some of them do last and perform very, very well. Projects like Hyperliquid, Bitcoin, and Ethereum. However, the majority of them will be outcompeted by something else and simply crash to dust. Now, again, that doesn't mean that you can't ride that initial wave, but you can't have psychological attachment to the project. You need a very clear entry and exit plan. A personal example that I can give of this, and falling into the trap myself, was an investment that I made into Sonic. Sonic used to be known as Phantom, and on the Phantom network, I made substantial money being an early investor into the project. They then kind of upgraded their network and moved into what we call Sonic. And unfortunately, I didn't see the writing on the wall. There were many occasions where we actually had meetings with some of the team members of the Sonic team, and me and my head analysts kind of said to each other, there's something off here, but we stayed married to the bag. And the reason we stayed married to it was because it had the best technology on the market. It was the fastest blockchain I've ever used. It was incredibly ahead in terms of DeFi activity that I was doing at the time. But the writing was on the wall. This project was doomed to fail because one of those metrics was off. The team was not there. I should have seen this. I should have known, and deep down I probably did, but I stayed invested to the project. You really need to understand that it is a dog-eat-dog world when it comes to altcoin investing. If all of the boxes are not being ticked, then remember, this is high-risk investing. It all really needs to line up, otherwise, majority of the time, they will crumble to dust. So don't be married to the bag. Now, another really important part of altcoin investing is to understanding risk management. Now, when we talk about altcoin investing, we're usually talking about a very small portion of our cryptocurrency portfolio. General rule of thumb is most people will have at least 50% of Bitcoin as their main holding in their entire portfolio. Then they may have 20 to 30% in Ethereum, and they may have 20, 10 or 5% in altcoin investing, depending on their personal level of risk. Way too many early crypto investors get sucked into having almost 90% of their portfolio in altcoin investing. And really, that is a ticking time bomb approach. Our approach at Imperial Wealth, and what we encourage our Crypto Academy clients to do, is to see it more as engage in altcoin investing to increase your position in Bitcoin. And what that means is majority of your investment should be in Bitcoin, Ethereum, and maybe a couple of high conviction long-term plays. Then for a small portion of your portfolio, you may allocate some of your Bitcoin into it if you think for a short period of time, those small plays will outperform Bitcoin. And if they do, remember, have your exit strategy before you even enter into them and take those profits back into Bitcoin. This is incredibly important. You will be gobbled up if you only invest into altcoins. Unless you're some sort of quantitative analyst or you're some sort of guru out there and you're really sniping the ins and outs and you have great technical analysis, which 99.99% of crypto investors are not, then you really need to have a well-structured portfolio and allow the altcoin portfolio part of it to be a smaller, high risk, high reward play. So there you have it. Here's the key things to understand in order to make altcoin investing successful and not fall into that 99% of people who fail when they invest into altcoins. Again, if you're going to do this on your own, then don't underestimate the level of analysis that needs to go into finding those gems, having a clear entry and exit strategy. Or if you recognize that you don't want to make crypto a second job of yours, then simply reach out to experts in the space. We have helped hundreds, if not 1,000 plus, clients take care of investing into cryptocurrency with a real strategy. Don't let your ego get ahead of yourself. If you want to do this properly and you want to compete in the altcoin investing market, then allow the experts to take care of that side of it for you. Don't make this a second job of yours. I can't wait to see you in the next video. If this has helped you, make sure that you leave a comment below on the best part that you got out of this video and share it with a friend or family member if you think they need to hear this. Take care, and I'll see you in the next episode. Thanks for tuning in to Crypto Coach Will. If you got value from today's episode, then make sure to subscribe so you never miss the latest tips to navigate the crypto market. If you're ready to take crypto investing to the next level, check out the links below where you can book in a call with my team of experts. We place strong emphasis on educating before investing in the market, so take advantage of the knowledge they have to share. Don't forget to follow us on socials @CryptoCoachWill, and I'll catch you in the next episode.